Do you want to know one of the biggest mistakes that business owners make? It's when they start their business, they're financially struggling, and they use their payroll tax money that they should be depositing with the federal government to float their business. Sometimes people don't do this intentionally. For example, I had a taxpayer who owned a business and he lived abroad. I hired someone to handle the financial affairs of the business who lived here in the US. That person actually stole from my client. Turns out, after his CPA reviewed all the transactions, he found that a lot of his money was missing from that trusted person. The IRS eventually wanted their money, but the business was closed. They were willing to do after the CEO of the company and charged them a civil penalty called the trust fund recovery penalty. Filed an appeal, and luckily for this taxpayer, we explained he wasn't willful. Because of the timeline of events, discovered the issues, and when the payroll taxes went unpaid, we were able to show that even though he was responsible, he was not willful. So as you can see in this letter, they say from the Office of Appeals, we determined the IRS should not hold you personally liable for non-payment of trust fund liabilities, and we're returning our case to collections with a non-assertion determination. Client's not going to be held responsible. Now, the most important thing to do is prevent this from even happening. If you own a company, make sure you pay your payroll taxes. This case was one because it was a smaller dollar amount, like in the 50K range. Now, if it was a lot larger, I don't know if that would have been the same outcome. So again, facts matter, along with having great counsel.